If you own real estate in Mexico, or you're thinking about buying, you've probably heard about capital gains tax. But here's something a lot of people miss. Having residency in Mexico can dramatically lower the amount of tax you'll owe when you sell. It's not just about where you live. It's a powerful financial strategy that could save you thousands or more. When you sell property in Mexico, the government charges capital gains tax. If you're not a resident and don't have a Mexican tax ID, called an RFC, you could be taxed 25% of the total sale price. That's with no deductions. But with residency and an RFC, you may only owe tax on your actual profit, and you can deduct costs like renovations and notary fees. Even better, if it's your primary residence and you have the right paperwork, you might qualify for a 0% tax exemption. Let's say you bought a condo for $300,000 and sold it later for $500,000. Without residency or an RFC, you'd pay 25% of the full sale price. That's $125,000 in tax. With residency and an RFC, your tax drops to just 35% of the $200,000 gain, or $70,000, and you can deduct expenses. If you qualify for the primary residence exemption, you could owe nothing at all. Timing is everything here. Many owners don't realize this until they're already selling, and by then, it might be too late to qualify. To get these tax benefits, you'll need a few things. First, a valid Mexican residency card, temporary or permanent. Then, an RFC with your Mexican address and proof that you lived at the property, like utility bills or bank statements. You'll also need invoices for any improvements and a notary who understands how to apply the exemption. These steps take time, so it's smart to plan well in advance of any sale. Even if you don't live in Mexico full-time, having residency can protect your future profits. It's not just about lifestyle. It's a strategic move. That's where Mexico residency experts comes in. We help U.S. and Canadian citizens get residency, register for an RFC, and prepare for a smoother, smarter property sale. Don't wait until you're ready to sell. Start your residency process now and save yourself a serious tax bill later on.